I would like to invite the learned Amir Farha onto the stage, managing partner at BECO, because he is going to be in conversation now with Ankur Shah, the Chief Finance and Strategy Officer of Careem. And they're going to talk about how you can nail the soft skills of fundraising. Over to you, Amir.
So good morning still. Lucky to have Ankur to take time and really give back with some advice to a lot of you guys. Maybe we start with a show of hands of people who are currently fundraising and the ones that are raising. Yeah, I might as well put my hand up too. Yeah, okay, fine. So sizes, maybe anyone raising up to $5 million in a round, more than 5, maybe more than 20, 30. So, okay, there you go, there's one. So maybe we can start off, Ankur maybe can tell you about himself and his background, and we can maybe share a few pointers before we start on the Q&A.
Sure. So thanks for having me, Danny, Amir. This is great. I haven't been here before, and it's a nice walk up to the to the ballroom. But so I've been with Careem for the last sort of three and a half years. Spent about 6 or 7 years before that at a venture fund where I also helped fundraise, primarily focusing on emerging markets. And then previously had spent some time both at McKinsey as well as a couple of startups, one in the first sort of .com era, and then the others were a more sort of operational kind of education, water related companies. And I sort of met Magnus and Mudassir when we first moved to Dubai, were the two founders of Careem, and I'd gotten to know them quite well, and eventually became one of the fools in the friends, family, and fools round of capital, if not the only fool, and then joined full time about 2 years into the journey. Because of 3 reasons. One, I thought both Magnus and Mudassir had a lot to teach me personally and professionally, and executed really well over the first 2 years, despite competition from some of our global peers and so on. Secondly, the opportunity in the region had become quite large, and so there was an opportunity to run and contribute to building something at reasonable scale already. And lastly, because we were building a business that helped improve people's lives and contribute to job creation across the region. So I felt this was the most exciting thing that I could be doing. Of course, it's been an incredible journey over the last couple of years. And we've gone through a couple of rounds of fundraising. We're in the middle of one right now. So I thought I'd sort of share 2 or 3 lessons, and I'm sure you guys have many more lessons to share, so this is by no means either right or comprehensive. There's just some reflections that we've had along the journey. And I think the first one is it helps to build relationship capital, because you sort of never know where the right introduction is going to come from, and that introduction is worth a lot in the fundraising effort. So, building relationships with people that you think can be helpful in a genuine way is super valuable, whether it is for this round or for the next round, and it's a sort of a multi-year game. Helps to think long-term about it. The second is that unfortunately there's no sort of shortcuts, there's no silver bullets. I don't know if there's any advisors in the room, but unfortunately, at the end of the day, 99% of the effort is effort that you need to put it on your own, and there's very few kind of third parties that can help. So it's just it's a diligent slog, day by day, phone call by phone call, email by email, and really no substitute for your own effort in telling your own story and building your own relationships. And then lastly, I think this is sort of underappreciated, particularly in I think in our region, and particularly for us. We've never had sort of the luxury of choice, and so one of the most important things is that leverage is probably the best friend that you can have in a fundraising process. If you have two options to choose from, that's when you can really work towards building value for yourself. And so the best way to improve terms, or whether they're financial or their governance terms, is to have leverage and build choice. So it's very, very valuable to have more than one option.
Okay, great. It's a good start. So you start off with those 3 lessons. I guess maybe I'll dig into the relationship capital piece to understand more. Like, how do you prepare when you go about raising funds? So maybe we'll start off with the mega raise, because obviously going and getting capital from the Silicon Valley is a challenge in itself. So maybe you can walk us through that experience and give context, because a lot of the companies here who are raising the 20 million plus rounds probably have to seek outside capital from the region, and maybe that kind of insight would be useful.
Yeah, just a disclaimer is in that we have not raised a significant amount of capital from Silicon Valley. Rakuten is, of course, in Silicon Valley, as one of our major investors, but they're a Japanese company. So I don't know that I have the solution to the Silicon Valley raise, and our friends at Fetcher probably have more to say about this, and most likely some of you. I think we found it challenging to communicate the opportunity in the region, and that tends to be really the number one reason why people are either unfamiliar or uncomfortable with significant investment in the region, is because we don't have, aside from sort of the lack of familiarity that investors tend to have in the region, we don't have sort of precedents of companies at our size, whether today or 2 years ago, who have done similar things. So the investors that we are looking to attract are typically investing in the region for the first time, which is always a difficult nut to crack. I think the process of telling the story is a similar one, whether it's in sort of Hong Kong or London or Riyadh or San Francisco, and ideally you have someone or yourself who knows a group of investors or can connect you to a group of investors that lead to in-person meetings, and that's really the best way to go about it in our experience.
And do you see like the regional story? What is it that tipped at least international investors to buy into this? Is it just from a macro standpoint, or do they see the Middle East as like an interesting region over time, and did you foster those relationships over years, and then they eventually bought into the story, or how maybe give us?
I think there's 3 aspects to the story. Of course, one is the region in which you operate. 2 is the industry in which you operate, and then 3 is the type of company that you are, and your team and performance and licenses and so on. And different people may get attracted to different parts of that story. You only need one hook out of that sort of 3-piece story to get the first meeting. But once you get through the first meeting, you really need to check the box on all three of these. And so, most likely, an international investor does not have a mandate specifically to invest in the region. And so you're sort of creating that opportunity if you're pitching to an international investor. And so they have to carve it out of something. And for that, the other two pieces of the story need to be that much stronger. And then if you're really lucky, there is an investor who has been looking at the region strategically, finds it to be an attractive location. And in that case, you've already sort of won a lot of the battle. Naturally, you still need to hit the other 2 points, but it helps to have someone who's open to investing in the region to begin with.
And how much does it, very valid points. I guess for me, it's like, how much does if you're going to go raise a big round, typically what we've seen sometimes with companies is that the international investor wants a local investor to lead. And having lead investors in this part of the world is sometimes quite challenging. So what advice do you have on that when you're raising I'd say the biggest challenge is obviously the 10 plus or maybe 15 plus $1 million rounds. And then if you get those, then you probably have a decent chance at the larger tickets. But those typically are where you need international investors. And there are very few that would lead those transactions. So maybe, I don't know if you can share, because I know that at some stage, Careem's transition was regional, and then they ended up getting outside money to really help that. And even Rakuten and other players who've come in there obviously wanted that local, STC, for example, and other players to give them comfort, maybe.
Yeah, so just sort of a recap of the ladder. Right? We raised friends, family, and fools first, and then we raised some money from STC Venture, and then we raised in our Series B from Altear Group and yourselves, and then in the C from Abraj, Wamda, and a group of others, including Lumia from Silicon Valley. And then in the D, we were led by Rakuten and STC, the parent, alongside a few others. And then in this current round, our existing investors have sort of re-upped their commitment first, and we're speaking to a couple of international investors at this point. I think the challenge of the lead investor is a challenge at any stage, regardless of the size of the round. And we've found that to be the single sort of most important thing in the fundraise is the lead investor. So at the beginning of the fundraise, that's almost everything that we're focused on is figuring out who will be the lead investor and what those terms will be, and then the process becomes immeasurably easier once that lead investor is secured. So whether it's local or international, I think wherever you can get that lead investor from is good enough for completing the raise. We have had sort of 3 regional, 1 international, and the international sort of came along with the regional kind of co-lead. Again, depending on how comfortable the investor is with that first bucket of the region, they're going to want to have some regional validation, either more or less. It always helps to have that regional validation because an international investor, unless they have an office here, is not going to feel like they know the market all that well. So having at the outset, a local investor like yourselves or someone else is super, super, super helpful to unlock the door to an international.
Yeah, I guess from a pricing perspective, so we've done deals where the founder sets the price, or the entrepreneur, or and deals where they want us to set the price, or let's say the lead investor. I guess Maybe you can give the pros and cons of each, and maybe what you recommend for entrepreneurs.
I would love to do a transaction where we set the price. Next time we are raising, we'll come to you guys. But no, so yeah, I've never experienced that, but
or maybe the term sheet, let's say the term sheet.
So you need to provide some guidance.
Yeah.
Everyone sort of always wants to, know sort of what valuation you expect, and it's a question that I find, gives a direction, but of course at the end, and so you put some sort of thought around it. Here's what some other people did. Here's why we think we're different, and so on and so forth. And I wouldn't worry too much about that number, because I think the people who are interested are in turn going to have their own view of what other people did and what they think is valuable or unique about you. And then it's a negotiation. So that guidance that you provide is always obviously going to be high, and the guidance that they provide is obviously always going to be low, and then you're going to have a discussion and find a way to meet in the middle, or somewhere around the middle, depending on the third point I mentioned, how much leverage you have. So if you have competition in the bids, then you're going to end up meeting closer to your number, and if you don't, then more likely closer to the investor's number.
Yeah, I guess for us, openly speaking, when we came in, we didn't have much negotiation. So
but I think that's the lead investor's job, and
exactly.
We negotiate with the lead, and then everybody else.
Exactly. I guess when we look at your captive.
And sorry, that's an important point, right? Like you negotiate with the lead, and then of course, those terms are set.
Yeah.
And that's the value of bringing the lead in.
Exactly.
You don't need to then have that conversation continuously.
Yeah, I agree, but sometimes you've come to the situation where actually, that's a very valid point. Maybe you can talk about today, look, your shareholder base is filled with quite a few institutions, each one with their own set of relationships and so forth. So outside of opening doors, do you find do your investors take an active role in your fundraising in terms of just outside of maybe advice or, anchoring, maybe telling you that they're going to commit to following on, those kind of situations? Do you engage with them on that level, and what kind of advice can you extract from these guys? Or what should an entrepreneur expect to get out of them?
No, absolutely. So, of course, you want to make sure that as you lead into fundraise, you're aligned with your investors. They know what you're doing. Most likely have the first sort of stab at whether or not they want to invest. And then rely on your investors to make introductions for you, wherever you go. That pool of introductions is super, super valuable. So the more support that your existing investors show, the easier is your fundraise, for obvious reasons, because it means that the people who are closest, presumably, to the company are the most supportive, and therefore you must be doing something right, and it helps people who don't know you that well get more comfortable with your story and your company. So having the support of existing investors is critical, whether for aligning with the strategy, committing additional capital, or making introductions at the right time to the right people.
Yeah, and I guess when you approach the fundraising, do you say, okay, let me really target these set of investors because they've invested in this space, they know it, or is it really just access to a pool of capital that you need? How much do you spend time really understanding that target list?
Yeah, that's a good question. I think it's there's sort of two circles, right? One is who can you get to? And then regardless of what they've invested in, you get to them.
Yeah.
And then two is, so I guess it's the sort of the three circles again, right? Is there anybody who's invested in this region? Is there anybody who's invested in this industry? And then it's sort of who can you get to, right? So those are the three circles that we look at. And then, we try to have that first sort of outreach be just as broad as possible, even if people don't qualify in one of these three circles. I mean, you have to start somewhere, so
Cast
you
a wide
have to
net,
disaggregate
and then
the
curate.
categories in these ways. But if you get an introduction to, I guess that's the third circle, is whoever you can get to.
Interesting. So what would you do differently if you're a founder trying to raise, or when you had raised, I guess, when you joined, in terms of looking at Careem's story and its history, would you do anything differently in how you raised your capital today? Or would you say that this is just how the cookie crumbled?
I think, look, each time we raised, I think we did our best. And at that time, we had the options we had.
Yeah.
If we had chosen to wait, there were some things that might have materialized, but it's something that I can't answer. We were at definitive documents with a investor at one point in time when we received a term sheet from another, and we chose to ignore the term sheet because we could not afford the uncertainty.
Yeah.
And then another time we were at definitive documents and we received a term sheet and we chose to continue negotiating because the value was much, much more significant. So, I think these are very, very circumstantial choices. Of course, I would love to have greater choice at all steps of the process, but
Yeah, I guess maybe I'll move on to the whole idea of economics and control, right? Because
Yeah.
I want to understand.
There's another set of questions related to whether you should use an advisor, which we can talk about at some point.
Well, no, go ahead.
Creates value or not in the process.
So I guess in the early stage, it's not very typical for a lot of these founders to use. I guess when did you start engaging with advisors in that respect? And would you recommend it to founders at what stage in their growth?
So most of the hands I think I saw were below sort of the 10 million raised, and at that level I definitely would not. I would not think that that an advisor can play a meaningful role. I think advisors start to become interested when the fee is reasonable for their size. But I think what we have found is, at least for this region, given the challenges of fundraising for a company that is in the region, the other two factors need to be really, really strong. And you're the best person who can tell that story in the strongest possible way. And you're going to need to ultimately build the model yourself, build the deck yourself, do the very first pitch yourself, the second pitch, the third pitch, and control literally all touch points. So we did start to use advisors, and our journey with advisors has evolved. At one point, we used an advisor because we thought that it would give us insurance and some choice with respect to the lead investor that we had already engaged with. And then subsequently, in realizing that we almost always had to do 95% of the work ourselves, we have a very different model of engaging with advisors now, where we engage with very, very specific individuals who have deep relationships in the area where we feel we're weak. So, if we want to target sort of Chinese, certain type of Chinese investors, or certain type of U.S. kind of family offices in a particular part of the country, then through references we'll find people who know that pool of investors really, really well, and then incentivize them purely for the introduction and the relationship management.
So not for success
on success.
On success, okay.
But only for those list of names,
people.
and only for introductions and relationship management. So the incentive fee is 50 basis points as opposed to 2% plus.
Yeah.
And then we'll control every aspect of the journey other than the relationship,
outside of the introduction. Yeah, we openly speaking, we had a really bad experience with an advisor for our own fundraise. So I think that's very useful as a data point. We went with the wrong advisor, and then we ended up having a tail on the contract, and all these elements that just make it really painful.
We've negotiated all these things very, very carefully now.
Yeah.
And
I wish we spoke before we raised. Anyway, yeah. So, sorry, Danny, I had to ask that. So I guess going back to the, I ask sometimes, we talk about this internally, sometimes entrepreneurs have a decision where they wait it out for the right investor and maybe take a little bit of capital, or they get an investor that may not be good for them in terms of value add, but have a ton of capital and give up a lot of the company. But one gets them to get there faster, one is a much more of a risk. If you were in those situations, I guess, what would you do as an entrepreneur? How would you assess that decision making?
Look, it's very, very difficult to answer this question, and I think it depends on, it really, really depends on how close you are to the brink, which is why you should always start earlier. So it's almost always taken us kind of 10 to 12 months to raise from the first time we sent out the first teaser deck to closing. And knowing that it's going to take you 12 months, you've got to start, at least 18 months before you're absolutely going to run out of money. And then, the first couple of sort of engagements you might have, in the region or elsewhere, will potentially be, people who think that, it might be reasonable to expect sort of a 50% discount to benchmark or what have you. And then at that point, you have to make the call of whether you feel the market's going to turn, some exogenous circumstance is going to make your fundraising harder. You feel the strategic value add is that high, which, frankly, almost always, again, you have to do things for yourself, so it's almost always not the case.
Yeah.
And then finally, whether you're comfortable giving up that much of the company. If you're staring at the abyss, then you got to do what you got to do to survive. I think you always have to survive to fight another day, no matter what the cost is. But you should try to push that decision out as far as possible, so you don't have to make a suboptimal decision.
Interesting. Do you do diligence on the investors that you talk to? Do you actually spend time figuring out, talking to their portfolio companies, understanding the value they get? What's like the type of value add you expect to receive from these kind of investors?
Yeah, I mean, again, this is all predicated on the notion that you might have a choice, right?
Yeah,
which
of course,
almost always you may not. And so you can do all the diligence while you're waiting around and helps you feel better about, your process and so on. But I mean, I think, it's very important to understand who's going to be sitting on your board, particularly from a lead investor, and whether you're comfortable. And again, predicated on whether you have a choice, that's something you may want to dig a little bit deeper into, because when the going is good, everything's great, always. But it's only when you really have to make difficult decisions that, that individual plays a very, very important role in sort of in your decision making, morale, motivation, and so on. So super, super important. I think in terms of value add, yes, for sure, introductions, reputation with other entrepreneurs. It's very, very difficult to get real feedback unless you know someone, another entrepreneur really well who's gone through
similar challenge.
Who's gone through who's kind of gone through an inflection point.
Okay.
So if you haven't gone through an inflection point, then everything's always been great. So if you can get that kind of feedback, then it's super valuable. And then again, what you do with that feedback is a function of whether you have a choice.
Interesting. So I guess maybe we'll walk on, because we're going to open up the questions in a few minutes. Just last question is on terms. And obviously there's pricing and there's control issues. Pricing, you said, it's typically the investor who you give guidance, the investor kind of can lead the indication of that pricing. But when it comes to terms, like on the control provisions, What do you think, what advice would you give entrepreneurs? What would you, if you had to look back and say, you know what, these are really important clauses that I would think twice before, negotiating or giving them up?
Yeah. Again, theoretically, you can kind of compare two term sheets, one with a lower price, better controls, and two with a higher price and worse controls. And in that context, if you have a choice, I would always choose the better controls.
Yeah.
So it's worth giving up some value in order to get better controls. Now, the question is, what are those controls? And here's where you either need, a really, really good kind of commercial lawyer, or you need someone on your board who has gone through lots and lots of term sheets and life cycle of companies where the value of a particular sentence in the document only becomes clear when you need to use it. When you're negotiating, it's sort of like, yeah, whatever, right? Like, I'll open this up to all my shareholders and it's totally fine, until you realize, man, I've got to go after 50 people to get a signature, and you're literally providing a veto to almost everyone. And so, the classic sort of economic value of the terms start from the liquidation preference. That's probably the most onerous. And then there's others around transfer restrictions and exits, and who sort of controls that decision, whether it's a listing, whether it's a sale, whether it's a secondary sale, whether it's a primary issuance. These things are all super, super critical. And then there's a couple of other kind of really, really like niggling little things that help you run your company better in terms of approval of budgets, in terms of sort of, are you able to make this kind of decision, that kind of decision, and you want to try to make sure that that is as sort of simple and straightforward as possible. And then there's a bunch of legal stuff around whether these sort of decision making is reflected in whether that decision making is the same to change the documents or not, because there could be backdoor ways of sort of enforcing vetoes on the company that you may not have thought about. But it's, I think that's where you need someone who's... So
shareholder matters, reserved matters, these type of things that you need
shareholder and reserved matters are sort of the actuals, but, ultimately you need to change your documents.
Yeah.
Right? And if you don't mirror the same thresholds for change of documents as you have for the shareholder matters, then you have a backdoor veto on the actual mechanical change of the documents. Right?
Interesting.
But yeah, I mean, you just need someone who's sort of been through it before, or an investor who's seen it several times on your side.
Okay, great. So I'd like to take the next few minutes to open the floor for questions. There's one over there. I know Talal raising his Series B as well, so...
And if you don't mind, just share sort of where you are, so that helps.
Yeah, absolutely. So we've raised $15 million to date.
Congratulations.
Primarily from BECO, Silicon Badia, insurance companies, and one insurance company and one family office. And we're raising our Series B round right now. And we're actually, really looking overseas mostly, because at this point, in this region, everyone who likes us gave us money. Everyone who doesn't will not give us money, right? So, so I guess the question is, how do you create, what are some practical things you did to create a sense of urgency during the fundraising process, right? So, as with any sale, you want to close the deal, you want to create a sense of urgency, and especially if you're trying to get a few different lead investors, you can play off each other.
It's a great question, and again, one that we may not have a good answer to. I think, what we have always tried to preference in the fundraising process is that we're not going to bluff, because ultimately, we want to create a partnership with whoever's coming in on a basis of kind of trust, openness, and we want that person to be open as well. And so we have always avoided sort of giving artificial deadlines, even though it's the easiest thing to do when someone asks you, hey, when are you planning to close this process? So my stock answer would be, I would love to close the process yesterday, because, I want to get back to running the business. Given where we are, there's some people that are further ahead, there's some people that are further behind. You're sort of X in this process. If all goes well, we expect that this would be the journey. And so, if we're in early April, we're expecting sort of term sheets by mid-May, but you never know what happens. And so we're going to do what we need to do in order to get these funds raised. And that's sort of the most open. You want to, as you said, create some guidance in terms of timeline. But equally, you don't want to put sort of a fake timeline out there that you have no control over whether someone's going to give you an offer by that timeline or not. And if they don't, you're still going to be out fundraising. So you don't want to go back to the same person in mid-June saying, boss, I told you I would get some offers in early May, but I'm still looking, right? So I think, the other thing is, in the region, people who said no at one point may not say no the second time around. And we found that consistently, is that our doors sort of continue to open as we sort of de-risk the company further and further. And so now the types of conversations we're having with regional investors very different from where we were sort of 2 years ago. So, I think it's very important not to close a door simply because you had a frustrating experience maybe the first time around. And, people's sort of attitudes are constantly changing. So you never know when you might just be the best sort of test case for someone to take to their investment committee or decision maker to say, man, let's give this thing a shot.
It's amazing. The back there, and then Philip right after.
Thanks. My name is Marwan. I used to work in a solar company that we've raised quite a lot of money, about 120 million. Now we're raising our seed round for a new venture. So I hope this question doesn't come off in the right way, in the wrong way. So really the question, Ankur, is around valuations and the tension between if the company is doing really well, that the valuation ends up being driven by so let's say the risk and trade-off between setting that valuation too high and not being able to reach that point, right? If there is a lot of demand and the valuation keeps on rising, what is the risk to the company, to the founders, to potential other investors of that valuation going a little bit too high?
It's a great question. You have to be able to grow into that valuation at some point, right? Now, if you end up with a very, very high number, it might make your subsequent round challenging. But you're still going to make look, it's very difficult as a founder to walk away from a high valuation. So it's somewhat of an academic question, because if you get it, then I kind of almost cannot think of anyone who would walk away from it. It would take an enormous amount of self-discipline to walk away from it. Unless, of course, there's some other part of the terms that you feel are important enough to walk away from. So I don't really know how to answer the question. Of course, when you're providing guidance, you're going to provide some high guidance and investors are going to come back with some low number. If you're lucky enough to end up with competition, you may sort of walk that number up. And then at that point, between you and your existing investors, everybody needs to look deep into themselves to figure out, is this something that we're going to do or not? And it's very difficult for me to imagine that, a decision would be made to not take it. So then it's a question of, living up to it.
Good morning. Yeah, my name is Philip, and I founded Magnet. The question is around, at the risk of being a bit controversial, as funding at later stages here in the region becomes a bit more challenging, many startups here in the region begin to approach international companies that are similar or potentially competitors in that space. And we've seen that, whether that's, for instance, Amazon Souk, we've seen that with Souk Al-Mal as another example. How different is the conversation when you are speaking to somebody that has an aligned business internationally, either for partial investment or acquisition, versus speaking to a pure investor?
Sorry, what's the question? How different is the conversation?
Different is the conversation when you're speaking to a potential competitor or aligned business versus speaking to an investor?
Naturally, it's very, very different. Meaning the competitor obviously knows your business better than any investor will know your business. And the competitor, whether they're here or not, are a competitor, right? So the amount that you are willing to share with them is also quite limited. But it doesn't take more than sort of a half an hour call for that competitor to figure out sort of whether this is something that's attractive or not, right? Now, at the next level, you may not want to share sort of the split by country and geography and all those kinds of things, but the top level, so there's like a couple of numbers that tell you, whether this is something that's worthwhile or not. And then, the question is, of course, sort of whether there is true strategic value. Because, with the competitor and, speaking from sort of, we make investments in companies that may or may not be competing as well. So, on the other side of the table, when I'm looking at making investments, ultimately, we're not an investor, right? We're an operating company. So our competitor is also not an investor. They're an operating company, and that's what they do. They're not sort of Berkshire Hathaway. They're, a platform of some sort somewhere, and they're interested in our capability, not necessarily in our financial return. Which means that at some point, that conversation is going to end up being a conversation about, how do we work together, right? Not just a 10% minority investment. That may happen in some cases if there's someone who's sort of super hands-off, or they're so big that they don't really see you as a competitor. It's like Amazon making a $2 million investment somewhere or what have you. But eventually, these companies are looking for capability, right? So I think that's the trade-off. And if you're ready to, having sort of an Amazon or a DD or a Gojek or whoever it is on your cap table in a significant manner is going to send a signal to other people you may be talking to that, here's someone who is likely to be an exit. And that's good or bad. You're closing some doors, but obviously you've got a door that's open, which is also valuable. So I think it really depends. You got to build the relationship step by step. And be very comfortable that that's what you're doing, because it could, having a strategic investor does not have the same motivations as a financial investor, so the decision making is going to be very different. There may be other things that inform their decision beyond sort of the return that you're generating, which is presumably what the financial investor is after, and then everyone's completely aligned. Whereas with the strategic, you don't know what their sort of motivations may be 2 years from now based on how their market changes.
Guys, we're done. I have to thank Ankur. He's one of the few people who's raised this kind of money in the region and true role model, so thank you very much.
Thank you guys for supporting us.
Thanks, Ankur.
Thanks, man.
Thank you, Ankur. Thank you.